Diversifying your investment portfolio is like having a financial safety net. It's about spreading your money across different investments to reduce risk. How can you strike the right balance to ensure stability without overcomplicating your investments? Today, we're delving into a crucial topic: diversifying your investment portfolio for stability. It's not just a fancy term. It's a strategy that can safeguard your wealth and provide a solid foundation for your financial future. So buckle up as we navigate through the intricate world of diversification. Understanding the power of diversification. Let's kick things off by understanding the power behind diversification. Simply put, it's the act of spreading your investments across different asset classes. Why? Well, it's like the age-old saying, don't put all your eggs in one basket. Diversification mitigates risk by ensuring that a poor-performing investment doesn't sink your entire portfolio. It's your shield against the unpredictable nature of the financial markets. Types of assets for diversification. When it comes to making smart choices with your money, having different types of assets is a bit like having different ingredients in your favorite recipe. It makes things more interesting. Each type of asset is like a different player on a team, bringing something special to the mix. Some assets, like stocks, can grow over time, while others, like bonds, are like a stable friend that you can always count on. It's a bit like putting together a delicious meal with a variety of flavors. Real estate might be the main dish, and a bit of cash and precious metals are like extra ingredients for safety and sparkle. Diversification isn't just about numbers. It's like having a group of friends with different strengths. Spreading your money across different types of assets isn't just about keeping your money safe. It's about feeling secure, like having a supportive community around you. In the world of assets and diversification, it's not just a money plan. It's a way of building a strong and balanced financial life. The balanced portfolio approach. Think of the balanced portfolio approach as crafting a mix of different flavors in a recipe tailored just for you. It's like assembling a team of players in a game, each with their unique strengths. This method means spreading your investments among various types of assets, like stocks, bonds, and maybe a sprinkle of cash. Much like adding different ingredients to a meal. It's a bit like deciding how much of the recipe should be savory and how much sweet to create the perfect taste. Whether you prefer a more cautious approach or up for a bit of adventure, finding the right balance is a bit like tuning a radio to your favorite station. It's not just about numbers. It's about creating a mix that suits your own style and taste, like finding the perfect harmony in a song. As you balance your investments, it's not only a financial strategy but also a bit like fine-tuning a piano, creating a melody that resonates with your goals, comfort, and the rhythm of your financial journey. Geographic diversification. Diversification isn't limited to asset classes. It extends to geography as well. Investing solely in your local market can expose you to regional economic fluctuations. It's like having all your friends from just one neighborhood. If something happens there, you might all feel the impact. But by diversifying globally, you're spreading your investments across different places, kind of like having friends from various areas. This way, if one region faces economic challenges, it won't hit your entire financial plan. It's a bit like having a safety net for your money that reaches beyond borders, giving you a more resilient and secure financial strategy. Rebalancing your portfolio. Taking care of your money is a bit like looking after a garden. Spreading your money around or diversifying isn't something you do just once. It's like a regular job, a bit like watering your plants regularly. Things change, like how the weather can be different. So just like you adjust your umbrella when it starts raining, you also need to make small changes to your investments. It's not about big numbers or complicated plans. It's like making sure your garden gets the right amount of sun and shade. This regular adjusting or rebalancing is like giving your money a checkup. It's not just about money, it's about keeping things on track, a bit like steering your bike in the right direction. Just as you change your plans, if you wanted to take a new path on a walk, keeping an eye on your investments ensures your money journey stays smooth through life's twists and turns. It's not just a task, it's like showing your money some love and making sure it grows just the way you want. Risk management strategies. Managing risks with your money is akin to having a plan for unexpected rainy days. It's not just about making money, it's about protecting what you have. One strategy is diversification, having different plants in your garden. If one doesn't do well, the others might still bloom. Another strategy is regular checkups, or what they call monitoring. It's going to the doctor to make sure you're healthy. When you see changes, you adjust, putting on a sweater when it gets cold. Insurance is another tool. It's having an umbrella in case it rains. It's not just about numbers. It's about feeling safe and secure. Just like you take precautions when riding a bike. Managing risks is a way of making sure you enjoy your money journey without too many bumps. It's more than a plan. It's having a buddy, a safety net for your money, making you feel confident and ready for whatever comes your way. The role of technology in diversification. In today's digital age, technology becomes a key player in how we handle our money and make smart choices. It's like having a helpful assistant in your financial journey. Technology doesn't just keep us connected, it also helps us diversify our investments, a bit like having different tools in a toolbox. With the click of a button, you can check how your investments are doing, a bit like peeking into a magic crystal ball that shows your financial future. It's not just about numbers on a screen. It's about having information right at your fingertips, empowering you to make decisions that fit your goals. Technology is like a trusty sidekick, making it easier to keep an eye on your money and make changes when needed. It brings a sense of control and convenience, a bit like having a GPS for your financial journey, guiding you through the twists and turns. Common diversification mistakes to avoid. Navigating the seas of diversification, like any financial journey, comes with its share of potential missteps that we do well to avoid. It's a bit like walking through a maze, one wrong turn, and you might find yourself in a tricky spot. One common mistake is putting all your eggs in one basket, or in financial terms, investing everything in a single type of asset. It's a bit like banking on a single horse in a race. If it stumbles, so does your entire investment. Another pitfall is neglecting to keep an eye on things, much like forgetting to check your phone for messages. If you don't regularly review and adjust your investments, it's like sailing without a compass. You might lose your way. Emotional decision-making is another challenge. Letting fear or excitement drive your choices is a bit like steering your ship through stormy waters without a steady hand on the wheel. These diversification hiccups are not just about numbers. They carry a sense of caution and lessons learned. Case studies of successful diversification. What better way to grasp the power of diversification than by exploring stories of real people who successfully navigated their financial journeys? It's like sitting down with a cup of tea and having a chat with a friend who's been through it all. These case studies are like windows into the lives of individuals who made smart choices, much like learning from the experiences of those who have walked the path before us. You get a sense of their triumphs and challenges, a bit like flipping through the pages of a book filled with valuable lessons. Long-term benefits of diversification. Thinking about the long-term benefits of diversification is like watching a tree grow slowly and steadily in your garden. It's not just about today, it's about taking care of something that lasts. Diversification over time is like planting seeds and seeing them turn into a lush garden. One big plus is that it helps reduce risks, kind of like having a strong umbrella for when things get tough financially. By spreading your investments, you're not putting all your money in one place. It's a feeling of safety, like having a net underneath you. Another good thing is the chance for your money to grow. It's a bit like taking care of a plant. With care and patience, it gets bigger and stronger.